All right, that's an interesting view. Let's go like this, and we go like this, like this. Oh yeah, and all right, let's look at some charts. Yeah, let's talk about it. So first of all, this one, we're gonna zoom out. Yeah, so can we get this thing? Okay, anyway, yeah. So this trade, I was looking at this, and as normal in the morning, the action is a bit slow. H4 was like on an in-between level, not really clear. We were not at the interesting level. But yeah, after a while, I noticed that yeah, H4, there's something to stand on here. And so that's good, right? And so I was looking to go along the year. Yeah, previous session we came down to this level, price went up a little bit, came back down, and you know, here I thought this was double top at this level, these two, and because of that I also thought that this was also a low. I'll show you the viewing options later why I did see it, but I saw these as double tops, and when price came above this, I thought to myself, you know what, we're changing power to up, and the pins here, we are rejecting the low, so I enter long here in the gap, you see, and my target is, well, is here. We'll see if we get there, but this has been used by the high, so look at the level. Maybe I can draw a line. You see it's clear, this level goes into the gap, so it's been used. Now yeah, later looking at it, I realized that this was not a double low, and in fact now we are only just switching, so I put the correct lines on. Also this one line I put on after, but yeah, that's that. I will show you the viewing error thing. I think you got, yeah, we got trading view here now. So the idea is, or what I was looking at was something like this. On the other screen, where I got a few more screens, it was like this and just a bit together, you know. And I was thinking to myself, oh, this is double bottom, what? And I realized I was moving it around like this and trying to figure out what's going on. And later I realized, just hit this, later reset view, and yeah, anyway, so it was not a double bottom, but almost there, and you know, the overall energy was like, oh, we're defeating this pulls down and going up. Anyway, so according to my book, this is not a valid trade, but if we go from here, we should go here. So I can, oh wait, come on, yeah, 1 second, okay. We should go to here, but we'll see about that, right? And also, yeah, there was another trade. Let's see. This, I think. Yeah, this is the cable, 1 minute at 8 o'clock. And it was going quite flat. This is a different setup. This is the direct price setup, right? So the idea is power comes into the market, and we see where the power is going first. So it's direct instantly. For this setup, we don't necessarily need to layer it with different time frames. But so look at the clock here, 07, 08. This arrow is when all of the power comes. For me, it's 0800 hours, and if you're in UK, it's well, 1 hour shifted, so it's probably 9, or never mind that, right? This is in EU morning time. You see the big candle; it coincides with this thing, right? So what we had was, well, we were falling down, started creating this thing. I'll just do let's do purple, right? It's cool. Let's zoom in. So we started falling down, right? we had this overnight kind of thing, what's going on, and then okay, we got power down, going down from here, we're going down, notice the gap, and we come back up and we're respecting it, you know, and we go power down. This is open for me, open. FX doesn't open, but yeah, this is 8 o'clock, right? And so we got power. This is strong, and this is my, well, I want to put stops here, right? Okay, and then we come to this area. Notice you see sell 0.7, and I sold. I was looking at, okay, pin bar, engulfing, going up, another pin. You can see it because of the price, and also there's a pin here, and there's engulfing formation, another engulfing formation. I basically just went, okay, I'm gonna limit short here, stop here, and hope it's filled, and I was filled. It was very small stop, maybe 5 or 6 pips up to here, and I was targeting this level, this flat level here, because according to my rules, if we don't scrape the high, we go for flat. If we scrape, meaning like some people say, if we lick this, if we go through it and then go back, then target is the low, but we did not in this case. So, and yeah, I just put the trade on, and I went to get some coffee, and not many minutes, and we hit that. And this was a I think 1.6, 1.5 R. Yeah, that's the one. Okay, so a few more minutes. Let's look at some of my trailing ideas, right? So we can take this. We're gonna need a new chart. I'm just gonna put on some instrument like just NZD CAD. I don't trade that, so that's good, right? Look at this flat stuff. Yeah, let's just go on H1 should be. I don't know if this is good enough. Let's just deactivate these things. And let's just go. So I'm going to demonstrate my trailing philosophy, right? And we have 2 methods. Okay, one, double bottom, low. That's the one method. Number 2, we have 2-way, right? Two methods, right? And then I'm working on another method, but I think it's good. I like it, but I'm not entirely convinced. So I may mention it, but for now, the 2 methods I use are these 2. And most often, what first triggers is the double bottom or low, and it works like this. For example, here, these 2 spikes through price here goes through the same area. But how do we see this area? How do we see them? Okay, it works like this. We have to go here, here, here. So according to my rules, this is what I do. Okay. Notice that I outline the spike and the level here, right? Okay. And then what I do is I draw it to the side. Okay. So price goes into this, can go through, can just pierce it, and yeah, but it's not allowed to close through like this here. Okay. So in my book, this is then a double top. What's also required is, if you look at the prices, how the big they are, this bar, this is square, this one, this one, this one, all of these, if you think for yourself in your head, how big are these, what's the average size needs to be able to fit here in between, otherwise it's not double top. Yeah. So for example, this low here, this low and this low, this is barely just a double low because it just barely fits something in between here. If we were lower, it wouldn't be. And this rule has to be there because in order to have a wave, we need to move away from price, right? We cannot overlap. We could also, or I could also do something with just gaps and fair value gaps and stuff. Anyway, so this is the double high, and in this case, double high and double bottom is the reverse. I don't need to explain that, I think. So if I was using this, I would use this if I was long, for example. So we would need to be long, for example, here at the breakout. Cool, I'm long here, right? Let's say I stop here and I want to target whatever high over there. I'm targeting this thing. Yeah, I really want it. Yeah, so let's say I'm long here and I see this formation. What's allowed in my system is this high, double top is formed. I am allowed to trail to here. The level that created the double, right? That's what I'm allowed to trail to, and I should, according to my system. Okay, and later you see it's taken out, no matter. That's how that trailing works. So talk about second now. Two wave is the most often second step of trailing, and the second wave works like this. It's more of like a trend following thing. Let's say for whatever reason I was long here, right? I'm super good and I'm long here and I'm targeting something. Yeah, I don't want it to be in the way. So notice that, okay, this is another one high, this is next high, these are same level, and when we come to this same, we have now a new low here. When we create this high here, we have a new low here, and when we create this high here, we have a new low here. Okay, so according to my system, is this higher? Okay, this is higher. So this low is the second low from the top, right? In this sequence, what we're seeing on the screen right now, this is a low, this is another low that is higher, this is a low, but this is not higher. So this is the number 2 low or 2 wave position. And what I will do if my stop was here, the stop on this example looks like 22 points. Yeah, accurate. 22 points, right? Pips. Okay. My stop would then be moved to this position here. With this line. Yeah. And then here in this example, my stop is now 8 points instead of 22. So almost a third. So if the risk was 100, the risk is now maybe 32, 35 instead. This is good, right? Because if you lose that amount instead. You don't lose a full R. And in this example, it then ends up not working, but the other way around, it would probably work. And anyway, so that is the 2 wave, right? And these two combined, let's find some. I think there was a good example on the FXCM while back. Yeah, we need some really cool charts to show this, right? I'm not sure. Let's make it the charts fit, right? As they say. Yeah. Okay. Nice sequence here, right? Okay. So price goes down. We oh my god, I make a mistake again. I just want to show one example where it's beneficial, although I do not have to, but I would like to. Maybe I should have prepared that before. I think there was a good example really trending in this. This has to be useful. Okay, we'll just assume we're long from here. Whatever, right? We are long from there. Okay, so this is the high, this is the low where our stop is. Okay, we create this high, and later we create this high as well. You see it on the chart. All of this in between, whatever, and the low between these is this one. At this point, we do nothing. We create this level, which is the same at that point when it's created, not before, but at this time. This is now a double high, and I can trail to here. In this example, 77 pips were used here, and the trail would be set to a profit of 245 instead, which is 3R. We keep going, right? So we are here. Let's zoom in a bit, maybe. Okay, like this. So we keep moving higher. Price goes away, comes back down, creates another high. So again, double high, right, like this, and then we have to put the stop here, right? Okay, next we go even further up, and we come down, and we go even further up again. So, okay, these two and that, right? So if I was using two wave, I would trail it here, right? If we are here, this is the low, this is the second low, this is where I would trail. If we were here, we have this level to use. If we were here, I had this level to use. But in this case, we have 3 in a row, double tops, and yeah, double top here. We trail to this position, and we are eventually taken out. But this appears to be good for 6R, whatever. It's just an example of how I currently trail my trades, and I would just like to add as a one note, I found this to be beneficial for my system, and the trail is not meant to keep you in profit, is what I say. The trail is there just to, I mean, oh yes, keep you in profit, but it doesn't really protect, like really close to price. It's just in the background and just keep in check, like, yeah. And we need to let the price move in order to see where it wants to go. And yeah, I think that's pretty much it. Yeah, as always, if you have questions, post your questions, and don't forget to like the video if you like it. All right, see you in the markets.